Can you help me figure out the estimated tax payments? Can you file my quarterly taxes for me? In today's video, I'm going to answer those two questions because I'm asked the same question every single week. First off, you don't actually file quarterly taxes at the federal level. You do have to pay taxes quarterly if you're an entrepreneur or if you have a certain amount of income. However, filing something you don't have to do. Is there one way across the board to tell somebody how to figure out their estimated tax payments? Eh, like most with things with the IRS, it depends. So in today's video, I'm going to show you who's required to make estimated tax payments, how they're figured, and I'm going to talk about how to pay them. Now, if you're new here, as I'm scrolling to page 8, let me go ahead and introduce myself. My name is Timalyn Bowens, and I am America's favorite EA. I'm also the owner of Bowens Tax Solutions, which is a virtual firm based in Louisville, Kentucky, and we specialize in stepping into your shoes and handling your tax issues. Now, I'm a firm believer in preventative care. So if you're here watching this video today, I hope that you have not reached the point of most of my clients, which is a first generation entrepreneur that owes the IRS $100,000 or more. Now, if you are there, I'm going to give you my information to reach out and book a phone call with me. If you're not there, congratulations on being proactive and figuring this out. So, as I said, you don't actually file quarterly taxes, but you do have to pay them. So, who must make estimated tax payments are U.S. citizens and resident aliens, residents of Puerto Rico, the U.S. Virgin Islands, Guam, and the Commonwealth of the Northern Islands, sorry, and the American Samoa. Also, non-resident aliens. The general rule is if you expect to owe at least $1,000 in tax after subtracting your withholding and refundable credits, you need to make estimated tax payments. So if you're working a W-2 job and it looks like you're still going to owe that $1,000, you need to do estimated tax payments. So if you have rental properties, anything like that, you need to make estimated tax payments. In today's example, we're going to look at two entrepreneurs that are married. The taxpayers for today are Oscar and Trudy Proud. Okay. Now, if there are things that you don't understand in this video that I get questions about, I may do a follow-up video, but I'm also going to point you to other videos and perhaps blog posts that I've done. So when we are figuring out your estimated tax payments, keep in mind that this is an estimate. Unless you have this thing down to a perfect science, you don't know what's going to happen during the year that may cause your income to not be what you expected it to be. Life be lifing, right? So we're going to start with your estimated adjusted gross income. Now, your adjusted gross income is also known as your AGI. If you do not know what that is and how to find it, I have a video right on this channel, 15 taxpayers, I'm sorry, 15 terms every taxpayer should know. If you prefer to read and get right to AGI, I also have a blog post by the same name that I'll link down below. For Oscar and Trudy Proud, their adjusted gross income that we're anticipating for 2023 is $180,000. Okay. Their deductions, they have the option to take the standard deduction or itemize. Now, this trips up a lot of entrepreneurs. They think they itemize because they write out all their expenses on the Schedule C. Oh, by the way, we're assuming that Oscar and Judy are not an S Corp, C Corp, or partnership. We're assuming that they are both single member LLCs filing Schedule Cs for their businesses. Okay. So even though they write out all their expenses there, that does not necessarily mean they itemize on their tax return. What we're referring to here is the standard deduction or if you itemize things such as your state and local taxes, mortgage interest, and charitable contributions. Since we are anticipating those things to be less than $27,700 in this example, they are going to use standard deduction, which for 2023 is $27,000. I'm sorry, $27,000. Woo! You all bear with me. $27,700. So they probably do qualify for the qualified business income deduction. However, in order to keep this pretty simple, that could be a whole nother video by itself. I'm not going to go over what the qualified business income deduction is. So for this example, we're going to have zero. So when we add lines 2A and 2B, we have $27,700, and that gets us to our taxable income. All right. So a lot of times people are confused by their gross income and think that's what they're paying taxes on. It's not, because we deduct things to get you down to your adjusted gross income. Then we take the standard deduction or itemized deduction to get you to your taxable income. That is something I also explain in the video, 15 tax terms every taxpayer should know, or on the blog post. All right. So we have $152,300 that is going to be taxed. Now, we're going to estimate what their tax is going to be. And when we get up here, this is available on page 7 of the packet. What we're going to do is find their filing status, which is married filing jointly. And like I said, what is it again? We have $152,300. So that is going to put them right here, 22% tax bracket. Now, all of their income is not being taxed at 22%. The first 22,000 is being taxed at 10. The amount between 22 and the 89,450 being taxed at 12%, right? Only the amount over $89,450 is being taxed at 22%. Once we plug that in, their tax liability is going to be $24,121. Now, this next part is for alternative minimum tax, also known as AMT. That is a very, very, very complex situation. And again, to keep things straightforward, I'm not going to go over it in this video. If you are a very high income earner, I'd be more than happy to answer your questions in the comments or even do a follow-up video. However, alternative minimum tax is for those, I won't say wealthy, I'll say very well off though. Definitely making more than Oscar and Trudy proud. And it's set in place to make sure that they at least pay a certain amount of tax each year. Okay? Doesn't apply to Oscar and Trudy. So for this example, we're going to have zero. When we add the two lines, we still have 24,121. Then we have credits. In this example, I'm going to have zero, but the types of credits this is asking for is, let's say Oscar and Judy, they bought an electric vehicle and they qualify for the EV credit. All right. That credit is what we would estimate here, not anything with their children or sugar mama and that credit. All right. If you don't know the difference between credits and deductions, again, go check out 15 tax terms every taxpayer should know. So we still have the $24,121. Now, if you skipped ahead of me and you saw line 9, you're probably wondering what in the world is self-employment tax and why is that tax higher than the income tax? Well, I am so glad you asked, my friend. Self-employment tax is what trips up a lot of my clients and the reason they owe in the first place. Because when you start out on this entrepreneurial journey, you know you'll have to pay taxes, but you don't know what all taxes you have to pay or when and how to pay them, which is why I'm doing this video, right? Well, Self-employment tax is your share as a business owner, Social Security and Medicare. Now, if you've ever worked a W-2 job before, you know that that wasn't optional to not have taken from your check. What you may not have known is that your employer was also paying into it for you on your behalf. So you paid 7.65%, and they also paid in 7.65%. So this $29,488 is based on Oscar and Trudy's net income from their businesses. All right. Not the adjusted gross income. So that is why this is actually higher than the income tax. All right. It's still a tax that has to be paid, but a different amount. The next thing I want to point out is when your employer pays it, they get to subtract it. So what the IRS allows you to do, you get to subtract half of your self-employment tax. But just like any other deduction, before you can actually deduct it, you actually have to pay it. Now, the self-employment tax deduction is an above the line deduction, which means it takes place before we figure your adjusted gross income. So it's already taken into account here. And that's what will happen when you actually file your taxes. All right. So taking that into consideration, when we add in or add up rather your self-employment tax, federal income tax, we get Oscar and Trudy's tax liability, the estimated tax liability, to be $53,609. This is what happens to my clients. They make good money. Everything looks great. It's amazing to make this money on your own and be your own boss, set your own schedule. But if they didn't pay taxes in all year, they're going to get hit with a bill for $53,609, and they're going to be faced with underpayment penalties, and they're going to be faced with failure to pay penalties if they don't start making these estimated tax payments. So before we even get to the final liability and what they're required to pay, they do have three children, right? They have Penny Proud, and then they have BB and CC, the twins. So that's $2,000 for each child that's under the age of 17, which is the rule for 2023. And then we also, because they're taking care of Sugar Mama, they get $500 for her as an other dependent credit. Again, if you don't understand what a credit is, check out the video, 15 tax terms every taxpayer should know, or the blog. Once we figure that in, their estimated tax liability now is $47,109. You all, if you can't tell, it's been a long day. Thanks for bearing with me as I'm getting tongue-tied, okay? Now, I'm all about preventative action. We want to avoid this penalty. So if they haven't been paying in on this, what can they pay to avoid the penalty? They're required to pay at least 90% of the liability or their full liability from 2022. So Oscar and Trudy, both of their businesses grew exponentially this year. Or I should say, are going to grow exponentially in 2023. For 2020, their liability was only $30,000. And only 30,000 is relative, right? If you make good money now, it's very easy to owe the IRS $30,000 if you're filing as a single member LLC on a Schedule C. If you are making money like that and want to stop paying so much in self-employment tax, you need to speak with your tax professional ASAP about whether or not it's a good time for you to consider switching over to an S corp. Okay? So, I also want to add, I have done a podcast on my podcast, Tax Relief with Timalyn Bowens on self-employment tax. I highly encourage you to check it out so you can find out more ways about how self-employment tax is figured and get a little more insight into when it makes sense to actually switch to an S corp. So for Oscar and Trudy, the 30,000 is less than the 42. So in order to avoid the underpayment penalty, they need to pay in $30,000 during 2023. They don't have W-2 jobs, so we have no estimated withholding from any place. It could be if they pulled from a retirement account, W-2 job, that type of thing. So when we subtract 13 from 12C, we get the 30,000 still. Is the result 0 or less? No. So we're going to go to 14B. Is the result less than 1,000? No. And I'm sorry, because I should have subtracted 13 from 11C, which would have given us, do this math in my head, $17,109. Still not less than 1,000, right? So we're going to go to line 15 to figure the required payment. What we're going to do is take the 30,000 divided by 4, because it's quarterly, right? You need 4 quarters to make a dollar to make a whole. So quarterly, you need to make 4 payments throughout the year. Their payments to avoid penalty is going to be the $7,500. Now, if we really think they're going to hit this at 11C and 180 is going to be their adjusted gross income, they'll still owe a total of $47,109. But right now, we're only worried about them avoiding the penalty, so we're dealing with the 30. So each quarter, we have $7,500. Now, you can make payments a few ways. This is something you can keep for your records so that you can keep track of the payments that you've made. All right. So you see the first payment for 2023 is due on the tax deadline, which is 4/18/2023. You may be thinking, hey, I thought taxes were due on April 15th. Typically they are. However, April 15th falls on a weekend. April 17th is considered a federal holiday in the Washington, D.C. area. So that's why it's moved to the 18th. Next, we have June 15th and September 15th. Then we have January 16th for the fourth payment. If you would like to make this payment via check or money order, this is what your payment voucher would look like. Now, this is for payment 4. Please scroll down to payment voucher 1 if you want to do it this way. It gives you all of the instructions, what to put on your check or money order, United States Treasury, and this is how you would fill it out. Now, you can also pay online. I'm going to shout this out again. Check out my blog or this channel for different ways you can pay online. I've covered how to pay online with your bank account, how to pay online with a debit or credit card. You can find those right here on this channel, or you can go to the blog and I'll walk you right through it. Now, if you're not a tax person, I hope I was able to break this down so it was easy enough for you to understand. If you have any questions, please let me know down in the comments below. If you feel overwhelmed, you're like, I already owe the IRS over $100,000, let me invite you to see if we're a good fit to work with each other. You can go to my website, bowenstaxsolutions.com, and in the top right corner, there's a button that says book now. If you miss it, scroll, you will have ample opportunity to either book now or it'll say talk with a tax professional. Click on that button and there will be a few questions that I ask to see if we're a good fit to even get on the phone. If we're not, I'll send you an email, let you know probably isn't going to be a good fit. Here are some resources. If you are a good fit, we're going to have a 15 to 20-minute conversation talking about your back tax issues, how you got there, and how I can potentially help. Now, back taxes, my friend, should not ruin your life. So whether it's me or another tax professional, make sure that you get the help that you need ASAP. All right? All right.